All right, good Wednesday morning. Hope everyone is doing well. Weekly leadership Whittaker, the weekly leadership call. One more week here, pretty exciting. Um, so we have a lot to cover today. Myself and Daniel on our team are going to be presenting. And let's just kind of go through here. So today's topics, we're going to talk about updates to the PPP program, some tax updates regarding net operating losses, and then Daniel is going to jump into managerial accounting, and then we will kind of wrap it up with what everybody else would like us to cover for next week. Again, and just maybe think about this as we're going today. If there's things you would like us to cover next week, things you don't feel there's clarity on in the marketplace, please let us know. We want to make sure that we're giving the best information that we can to our clients and to our friends. So again, give us topics and we'll be glad to put things together. If you have questions as we're going through this, please do so in the chat box. So first thing, update on the Paycheck Protection program. The original tranche of $350 billion is gone. I think most of us that applied for loans know that. More is likely on the way. So reading yesterday, it looks like the Senate passed a plan for $310 billion more, and it's going to go to the House to be signed hopefully tomorrow. From talking to the banks that we've been talking to, the banks are still processing applications as if the money is going to be available. So call your banker, make sure you're in contact with them, be patient. I think from all the information that I've read, bankers I've talked to, they've been doing everything they can. And all banks have had different processes. So be patient and get in touch with your banker. And it looks like more money is going to be on the way in the next week or so. So the next question is, if we have the PPP money, how do we best utilize that? I've had questions from a couple of clients as to when does the 8-week period begin? So when does that look back payroll period begin? And the 8-week period begins on the date that the lender makes the first disbursement. That's crystal clear. The Department of Treasury put together an FAQ on their website, and it was on their FAQ question 20 addressed that specific item. So that's when it starts. It's when the first disbursement is made. Whoa, sorry about that. We need to make sure that we maintain full-time equivalents. So we can't let our payroll dip. We had a client call last week and say, hey, it looks like going through our sample calculations that we have to keep everybody on the team, and we can't, if we reduce any of our payroll, it's going to create a situation that we have to pay back some of the money. And I think clearly that is the answer. You have to use the money for payroll, and that's how it's meant to work out. So make sure you maintain your full-time equivalents. At least 75% of the money, of the PPP money, needs to be spent on payroll. There's a cap of $100,000 annualized salary per employee. You can also use it to pay employee benefits. So it's essentially everything that went into the calculation when you did the application. It's those same categories: salaries, wages, commissions, employee benefits, including vacation. I'm just reading off a list here: healthcare, retirement benefits, etc. And then you can spend up to 25% on rent, mortgage interest, and utilities if it was on a property or contract that was in place prior to February 15th, 2020. So that's the, up to 25%. And that is directly from the Department of Treasury. There is an information sheet, borrow information sheet on the Department of Treasury website that explains that. So That's again how the money can be spent. How much of the loan will be forgiven? So if the loan was used for anything other than the items that we discussed on the previous slide, meaning payroll costs, mortgage interest, rent, and utilities, or if the full-time headcount is decreased, or if salaries and wages decreased by more than 25% of any employee that made less than $100,000, then a portion, there's a calculation, and a portion of that loan will not be forgiven and will need to be paid back. We expect to have a calculator posted on our website. We have a COVID-19 page on our website. We expect to have a loan forgiveness calculator posted later today or tomorrow that you guys can all visit and download that calculator. And again, it's very similar to the calculation of how the loan is made. So this first point here is interesting. This is right out of the Department of Treasury information. And it says, due to likely high subscription, it's anticipated that not more than 25% of the forgiven amount may be for non-payroll costs. So for me, that's really interesting that it says anticipated. So again, make sure that we don't go over 25% on any of those non-payroll costs. You have until June 30th to restore your full-time employment and salary levels for any changes between February 15th and April 26th. So we need to make sure that we have our employees back on the team and or the same number of full-time equivalents. And that I have talked to a couple of clients about we have clients that have let a couple of people go and wanted to rehire new people, which that also will qualify. I think a couple of clients have used this time period right now to let go of a couple of underperforming employees and then try to bring on better performing employees to this. So that does qualify as well. I want to talk a little bit about net operating losses. So this is a tax update. The CARES Act, it changed the net operating loss carryback rules. So we've been in a situation that net operating losses have been carried forward right now. And the CARES Act, for any tax years beginning after December 31st, 17 and before 1/1/21, we can carry those losses back up to 5 years to offset profitable years and obtain tax refunds. So that's really interesting because typically NOLs weren't carried back 5 years. So now we can carry them back 5 years, and we can do that and offset income years that were probably higher tax rate years. So as we know, as an example, with a C corporation, it's a flat 21% now. And also on the individual tax side. So if you have a pass-through entity, individual tax rates are lower. So now that this is changed, if we go back to, let's say 2014, which is 5 years ago, we were in a higher tax rate environment. So the ability to carry these losses back, if we had losses in 2018 or if we have losses in 2019, we can carry those back 5 years. So this is a really good tax planning opportunity. Another tax planning opportunity in here, we're working with some clients doing cost segregation studies to accelerate depreciation on their buildings. And in cases where that's creating a net operating loss, we can use that to go back and get refunds of previous taxes paid, up to 5 years ago. So that is that's a great strategy, and it's something that we are looking at on a client by client basis. Again, if we have losses this year, we'll be able to carry those back 5 years. So that's great information there. Again, we talked about this, that NOLs are more valuable in years where tax rates were higher. And then this is something that's important. California does not conform to this rule. So this is a federal only rule at this point. So that's something to just note, that we can take these losses and carry them back for federal purposes, but not for California. For California, they will go forward. So that takes care of that. I'm going to hand it over to Daniel, and Daniel is going to get into some managerial accounting and help us understand how to best use our financials and manage through the processes that we're going through right now.
All right. So in terms of manager accounting, the heart behind sharing some accounting best practices is, as we've all been in positions where adjustments have been made either to operations or to payroll, this really is a time where we need to keep our eye on the ball in terms of accounting data, because that's where a lot of our clarity continuously can be attained. And so to jump right in, why this matters now. As I just mentioned, a lot of things have changed from how it was about a month or two ago, and the usability of accounting data needs to continue to be maintained, if not enhanced, during uncertainty. Because my second point is, the models that some of us have created, they're only going to be as good as the numbers that we feed into it. And so as we go forward, as the days go on, as the weeks progress, how do we know if we made the right decision? How do we know if we're doing okay? Or how do we know if we need to make additional adjustments? And so for me, tracking actual results versus expected results really is important to maintain clarity and visibility on how our business is being impacted by the pandemic. And so, of course, how do we do this when there is limited time? The very first thing is we need to simplify the approach. We need to think about our business, our measurables in a potentially new way if we truly have no time, because for a lot of us, we are on survival mode, and we're jumping from fire to crisis. And so what I would encourage is, don't seek to measure everything. Go back to a few core things, and maybe, just to bring a positive twist to it, one mindset you could apply is, if you were going away for a month, what are the core numbers or the core metrics of your business that you would like to know? What are those 1 to 3 numbers that you need to know that your business is doing okay? And so to that extent, that mental exercise is for the purpose of going back to the core. Given where my business is today, what do I need to maintain visibility and clarity on? That may be different. Those things may be different than what it was 2 months ago. And so really ask that question to hopefully simplify the approach to, in a way, not have more time because, we all have limited time, but maybe to reshift the usage of this very limited resource called time. A few examples that we just talked about that we can measure is, what is our FTE count for employees? Is cash on my books recorded timely and accurately? And are there any non-financial data that we need to keep an eye on, such as a backlog, to see, does my warehouse still need to be staffed where it's at? Do I need actually more people now? Or are orders coming in? Have they significantly decreased? And so these are just a few questions just to get the ball rolling. And so, where do we start? It starts with a seemingly simple question of, is there a core issue or issues that have bothered you more than normal? And 2 examples of that is cash or payroll. And so if it is cash, then in the line of simplicity, and just to apply that thinking, let's focus only on the accounting policies around cash. And so what are those? A few examples are, making sure that cash receipts are recorded as it happens. To take that one step further, our accounting data, if you look at our cash detail, we should be able to easily identify who that cash came from, so that we could clearly track what customers are still active. In terms of cash payments, so money going out, are all my bills entered as accounts payable? This could be something that Historically, we were like 75% or 80% okay in this regard. Most of our bills are entered, but not all of them. This is really a great opportunity to implement a system that truly is scalable. And what I mean by that is the more volume there is, we do not lose efficiencies. And so is there something that we need to change or modify in terms of recording bills so that my accounts payable ledger is as complete and accurate as possible? And lastly, on cash, in regards to bank reconciliations, I think we need to discipline ourselves to look at and compare our book balance and our bank balance and really get a theoretical understanding of why those two are different. And in short, those two things can be different. One based on, simply checks or deposits are not yet recorded in our system. So that's one. It could be just, things as lag time in recording. Secondly, it's really the outstanding checks and outstanding deposits. And part of that is we should be able to log into our bank account and on a given day, look into our accounting records on that given day. And maybe not exactly, but we should have a good enough handle where those two numbers should reconcile in our heads, at least on an emotional level. And I think, the old adage of dealing with cash, dealing with money is truly an emotional discipline and emotional decisions. I feel it's very similar even on the business side, because we do have to be able to emotionally, mentally understand our cash so that we could simply sleep better at night. Right now we're all strapped, and having a tight handle on cash is really, really critical. And then secondly, if it is more payroll related, some metrics, some numbers, some records to keep a good handle on is what is our FTE count for employees, both today and before the pandemic. For those that have applied for the PPP loan, we should know that right now. And so as we move forward, as we filled out those applications, we should have a way to track what our numbers are going forward. Secondly is how much PTO, paid time off, has been used by our team up to this point. For some companies, they've allowed, their employees to utilize their accrued vacation, their accrued sick, to not have their decrease in pay or hours be as significant to them on a personal side. That leads to the really idea that I'll get to in more detail a bit later, but was that number before the pandemic, did I know what that number was? Did I know how much PTO accrual I had up to that point? Was that liability recorded on the balance sheet, or was it not? And then lastly, on payroll, can I predict payroll expenses for the next 2 months? If I can't, then what data do I need? Who can obtain this data for me? And so those are just a few ideas of how to get things started. And so as we go through the process, things to keep in mind is we need to look at ourselves, our business, our team, our vendors, and our customers differently. I list those out separately because we need to look at each of those individually, because they're going to have different motivating factors, different stressors. And as we seek to make sense of this ever-changing landscape that we're in, it really starts with ourselves as the leaders of our team, maybe even in our communities. We need to make sure that we are the best selves so that we can actually lead our team, be continuous innovators for our customers, stay on the good side of our key vendors. We need to be just looking at ourselves first. Secondly, the encouragement is to lean into the uncertainty by refocusing our attention and efforts to the core of what is most important. I know we're all at different points on this, but as we have been in business 5, 10, 15, 30, 40, 50 years, and maybe even longer for some, legacy information may have overcomplicated what we have thought of. And so this is really an opportunity, and I'm saying it that way on purpose. It's an opportunity for us to really refocus our attention and efforts to the core of what is most important. And I'm not saying that we haven't done that yet, but I'm just saying that that is actually a very healthy thing that we should continue as we maneuver through this season. Third, a lot of mistakes will be made, if not made already. And so a lot of grace is really required, first, again, to ourselves. We need to allow ourselves to make mistakes and, in a way, forgive ourselves for those mistakes. And as we do that, I think it's going to be a lot easier to treat our team in a way that is going to give them that emotional mental security that they may need, that we may not even be aware of. And so just, making that point clear that a lot of mistakes, if not made already, will be made. And so lastly, a general point, accuracy and accounting data requires a collection of systems that work together. Focus on solving one weakness at a time, because something like accounting data, it just seems so automatic, right? It feels so automatic. It should just be working. Unfortunately, that's not really how it works. And so recognizing that the accuracy in accounting data in full, it truly does require a collection of systems, both in technology and in people, to continuously work together as times change. And so to put that in context, one example of that is on the accounts receivable side. For accounts receivable, let's run comparisons on current levels and customer volume to normal times to see how different of a situation we are today. As we look at those things, the goal is to identify trends or what companies are still active. That this may be a time to consider deepening your relationship with your customers to continue to provide what they need, and to meet them on that maybe emotional mental level, so that we could get beyond just a transactional relationship, but maybe more of a, not necessarily friend type relationship, but more of that person, that human element. And then just on the accounting system side, we need to make sure that customer invoices are recorded timely and accurately, because that's how we're going to be able to continue to track our progress as we go through this. And so this is one example of one accounting system that leads into other components such as cash. And so if our accounts receivable systems are strong, then in theory, our cash deposit side is also strengthened. Our revenue recordings are also strengthened. And then on the other side, when you look at accounts payable on the similar side, then we should have a better handle on cash outflows, and we should also have better expectations on expenses. And so those are things that we need to all kind of, work together. And so going back to the earlier point of simplicity and just focusing on one thing at a time, if accounts receivable is an area of improvement, then what is one thing specific to accounts receivable that we can implement today to improve on this? I do want to talk about the balance sheet a little bit, because for me, a lot of times the balance sheet is the forgotten financial statement that I think is very critically important, because that shows you what your financial health is for that day. Yes, revenue and expenses are absolutely vital to day-to-day operations, but the balance sheet is really going to show you what you should be looking at for the future and what your historic performance has been feeding to your financial health. And so what do I mean by that? Accounting policies around the balance sheet are things like, is cash properly stated? Is my accounts receivable complete and accurate? Are inventory items, for those that have inventory, are they valued properly? And if these are not, then this may be a great time to pause and look at our systems. Maybe with our decreased volume for some, this may be a great opportunity to look at, okay, what are my discrepancies really caused by and get a really good handle on it, so that we get to develop a scalable system, so that in the future, hopefully when we do ramp up again with more volume, we'll be able to still maintain accuracy and reliability. On the liability side, is my accounts payable complete and accurate? Are all my bills entered? Is PTO accrual on my books? And that leads to, are there obligations that need to be paid that are unknown or not quantified? This is one where, in accountant speak, do I have any unrecorded or off balance sheet liabilities that the company is obliged to pay in the future? PTO is one of those where it's a mixed bag of, some companies accrue for their PTO time on their books, some don't, based on their HR policies. Some should, some shouldn't. But the bigger idea to drive home is, are there any obligations that are not recorded, either it be due to lack of completeness or a lack of an ability, on the operations side to really estimate what that should be? Do we need to look at those so that obligations that need to be paid, that should be recorded, are known, at least known, if not recorded on the balance sheet? And so, closing thoughts and comments as we go through this. The first thing is time, right? We need to do things one thing at a time. And that one thing, it could take an hour, it could take a day, it could take a few weeks to correct and to fix, depending on what the weakness is. And so allow for time to really drive home a sustainable change. And so, kind of going down the box below, looking at behaviors, as an accountant, obviously I'm going to be saying this, but improvements to accounting policies are relevant during any season, but behaviors built now will make us stronger for the future. Again, going back to the theory of, we need to make our businesses continuously scalable so that we could really not be afraid of when the nozzle turns back on, right? Because I don't know how, the mindset is, with the participants here, but as we have ramped down, either it be on personnel or capacity, there may be starting to, thoughts of, okay, when we do jump back up, how in the world are we going to be able to fulfill on the demands of the customers that hopefully will come? And so one simple way to mitigate that is, really building in strong accounting policies and procedures to make our businesses scalable, so that when we have one invoice, 100 invoices, 10,000 invoices, that hopefully that system is going to allow us to be efficient, whatever the volume. Going to the top right box for change, we need to be sensitive to those who resist change. As leaders, we need to lead them through improvements. And this is just a statement of, not fact per se, but of observation. Accountants typically are not the ones who drive change. Accountants are very compliance driven. And so, recognize that as we go through and maybe implement new accounting policies, they're not going to want to be most excited typically. And so meet your team where they're at. And that leads to the communication aspect. Communication with your team and lead them through prioritizing their workload. Because again, with the decreased hours, with some team members that are still on, that are picking up more slack than normal, help them prioritize their workload so that these things can be worked on. And again, the last point I'll reiterate, meet your team where they're at, either be on a mental or emotional level. Some are more scared than others. Some are more resistant to change than others. Some are more reactive than others. And so meet each team member where they're at and ask them, hey, what do you think is possible? Because I think if going back to the earlier slide of where to start, if we truly have no idea where to start, this is really a great opportunity to check in with our team and to also see, hey, what do you think we could do so that we can improve going forward? And so meeting them where they're at and asking them what they believe is possible could really be critical to maneuvering through this as a collective unit. And so with that, I will pass it back to Dan. Oh, I think Dan's still muted.
Thanks, Daniel.
Yep.
All right, I want to be sensitive to everybody on the call. I don't see any questions or any comments that anybody posted. So it looks like we're good there. If you have any questions after this call, please feel free to email any of us on our team and we'll do our best to answer them. And oh, it looks like we do have a question. All right, somebody has a PPP question. Why don't you go ahead and ask the question in the chat and we'll do our best to answer it. All right, so the question is, I'm confused about full-time equivalents versus the actual number of employees. So there's a calculation process in the PPP language. We can pull that from the PPP language from the Department of Treasury website and send that to you. But you can have full-time equivalents, and I believe a full-time equivalent is 40 hours a week or more. And I'm not sure that the Department of Treasury language actually addresses this specifically. At least I haven't seen the language specifically, so I'll look for it. But you can have an actual employee that works part-time, say 20 hours a week, and that's not a full-time equivalent. So you need to convert your payroll or your employees to full-time equivalents to see what that looks like. I'll find the language and send it to you. Let's see, I have one more question here. Got it. Okay, so this is all from, okay, so all these questions are from a specific person. I will go ahead and reach out to you and answer the questions kind of offline and take care of those with you. Anybody else have questions outside of that? Let me look here. Okay. Got it. So that's all we have. Does anybody have any topics that they want us to cover next week? Nope. Okay. Sounds good. Oh, wait, one more. Yeah, so somebody's asking about the calculator, the loan forgiveness calculator. We can send that. You guys will get a link to an email, and the calculator will be in the link, and also it will be on our website. I'm thinking end of today or tomorrow, and the loan forgiveness calculator will be up there for you guys. So anyway, I guess that's all that I have. Have a good day. I appreciate everyone for joining. Look forward to talking to everybody next week. Take care. Bye-bye.